How would you like to learn how to day trade using Fibonacci strategies? Hey, welcome back YouTube. My name is Mike Swartz. Today, we're going to talk about how to day trade using Fibonacci strategies. Now, if you're new to Fibonacci, don't worry. I'm going to take you through the process. It's very easy. I also have two other videos on Fibonacci, one on Fibonacci retracements and one on Fibonacci extensions. Again, you can find both of those in the description box down below. All right, so let's go ahead, jump into the TradingView charts. All right, so here we are looking at the TradingView charts. Now, if you don't know what TradingView is, you can go to tradingview.com, and you don't need a brokerage account to be able to use their service. It's free. I'm using the free version, so everything you guys see on this video, you guys can duplicate for absolutely free, or at least the time of me recording this video. All right, so most traders, when they think about Fibonacci, they think about Fibonacci extensions or Fibonacci retracements. Now, if you're wondering, and let's just do a real quick brief recap. I do have two videos out there, one that talks about Fibonacci retracements, another that talks about extensions. But a retracement is essentially where we're trying to measure where the market rallied up, how far it's likely to pull back before it's going to resume its move. In a Fibonacci extension, we're actually looking to try to see how far the market may move before we get a meaningful correction. All right, so I'm going to go ahead and use the Fibonacci extension tool real quick. Come over here. So let's say the market had this down move right here, and it actually stops about right here, and then we project back up, right? Which means that if the market can move this distance, once it retraces back up, it's likely to be able to come back down towards this price point. Now, this becomes important information to know because we're going to build upon this in just a few moments, all right? So here's where I drew the Fibonacci extension point, and it completes at the 100%. Well, if we can find more than one reason that this level becomes significant, the better the odds are that we'll get a reaction at that price point. Here's another technique that we can use. We're going to come back over, and what we're going to do is we're going to go to our Fibonacci retracement tool. And what I'm going to do is I'm going to measure from this low point right here up to the swing high right over here. And we're going to project some levels down. Now, what I'm going to do for those of you that don't currently have this tool set up, I want to show you what levels I have showing. I have the 0%, the 0.382%, the 0.618, the 1, the 1.272, and I also have the 50%, 0.5, 0.786, 0.168, or 0.618, yeah. And then this one I don't need on right here, right? That's going to give us the levels we want to look at. Now, this might be a little bit hard to see, but as your eyes, start to get adjusted to it and whatnot, you can see that we have a 100% Fibonacci extension right here, along with a 1.168. So we have two levels that are agreeing at this price point, which amplifies the potential that we're going to get some type of reaction out of this level. Okay, so again, we want to combine the two tools to look for a reason to get long the market in this instance, because we've now had an external retracement of 1.618, and then we've had a 1-to-1 measured move down here. So we want to look for a reason to get long. So once we've identified the level, the next step is let's look for some type of bullish price pattern. And I look for, hammer candles or like an engulfing type of candle. We come down here, we rally up a little bit, but we don't really get the push, and then we try to come back down. At this point right here, we get a bullish engulfing type of candle. I'm not real fond of the wick on this candle, but in trading, everything's not perfect. So at this case, what I would do once I saw this candle is I would put a buy stop order right above this candle. Now, what a buy stop order would do is it would say, if the market comes one tick above this candle, then I will be long, and I'll look for a continuation to the top side. And it has a very good stop loss placement. We can place our stop loss right below both of these lines, not right below the candle, but right below the confluence zones from the Fibonacci extension as well as the Fibonacci retracement. I just want to give you guys a friendly reminder before we jump into example number 2, that if you want a chance to earn a funded account, I have a 20% off link in the description box down below with Earn to Trade, to where if you can prove your skill set as a trader, they'll give you funds to trade with. Now let's jump into example number 2. All right, so in example number 1, we looked at the S&P 500 on an hourly chart. Now for this video, we're gonna look at the EURUSD on a 15-minute time period. I wanna show you guys this technique will work across multiple time frames and different assets. So what I'm gonna do is, I'm gonna grab the Fibonacci retracement tool. I'm gonna go from the candle wick down here to the candle wick down here, and then I'm gonna pull it over to the right. That way I can see where the lines come in. Now, the 1618 is right up here as this blue line right where my cursor is. The next thing we're gonna do is we're gonna come right over here and we're gonna pull for the Fibonacci extension tool, and we're gonna see this measured move right here where it terminates at. So from here up to the swing, we're gonna pull down, and then I'm gonna move this over just so I can see it to the right. And if you guys look right here, you can see we have a little bit of a gap in between the 1.1 and the 1.618. And this would be a little bit of a confluence zone. Then I want to look for a bearish price candle. This candle right here doesn't quite meet it. I wish it would have been a little bit lower, but then we get this candle right here. We have an inverted hammer. We can put a sell stop right below that candle. Stop loss could go a couple ticks above here, looking for the market to continue downward. Again, a very good way to utilize the Fibonacci extension tool with the retracement tool in order to find A+ trade locations. Because keep this in mind, if one set of traders are using the retracement tool and another set of traders are using the extension, now we have two groups of traders focusing on one particular price point, and at that point we tend to get a reaction at those levels. And then third, all we have to do is wait for a bearish price action candle. In this instance, if it was a bullish scenario we're looking for, then we look for a bullish price action candle. Again, a very simple concept. It just takes a little bit of time to be able to see the swing points and know where to pull the fibs at. But as you go back through the charts and you practice, I'm sure that you'll get the hang of it. Like always, hope you guys enjoyed today's video. If you did, please give it a big thumbs up. I appreciate it. Till next time, good luck and good trading.